Hi everyone, my name is Jason Slade and I'm the BPC convener. I took on the role at the beginning of the year and I did it because I think there's a big opportunity for the actuarial profession to make our mark in banking. And to get there, we need to raise brand actuary in banking up to the same revered and trusted position that we currently hold in insurance and superannuation. Now once again, the banking sector has been front and centre in business news this year. Housing affordability and the risk of overexposure by the banks and the broader economy to an elevated property market has been high on the agenda. Unfortunately, there's also been a number of high-profile conduct and behaviour issues, from the AUSTRAC transaction monitoring issues, to the BBSW rate rigging allegations, to financial planning failures, to the Four Corners reports into the life insurance industry. These things have led to increased calls by some for a royal commission into the banks and an ongoing series of Senate hearings with the Big Four bank CEOs. On the regulation front, there's also been some significant activity. APRA released its position on what it means for the banking sector to be unquestionably strong and how much capital they need to hold. APRA also imposed growth limits on the banks in terms of their lending to investors in the residential property market, in an attempt to both limit exposure as well as to take some of the heat out of the property market. And finally, there was a change in accounting standards with the upcoming introduction of IFRS 9, and this changes the way banks need to provide for future loan losses and is much more akin to a traditional actuarial reserving approach. The increased level of risk consciousness across the sector bodes very well for us as actuaries. As risk measurers and risk managers, there are lots of areas where the actuarial skill set can make a difference. From credit decision making and pricing, to credit reserving, to stress testing and capital management, and through to asset liability managing and liquidity risk. So what has the Banking Practice Committee been doing all year? Well, the vast majority of our focus has been on getting a Part 3 banking course up and running, so we can educate actuarial students on what it means to be a financial risk measurer or risk manager in a banking context. Mark Hayes has just stepped into the role of Education Subcommittee Convener, and he will help see this through. Another area of focus has been to create an event that brings actuaries in banking together, to share perspectives and to learn from each other. Looking forward, on top of getting the banking course up and running and continuing to have networking events, we'll also focus on what else we can do to raise brand actuary in banking. We would like the profession to be more visible, expressing views on the banking issues of the day. As a starter, we currently have a small group led by Andrew Doman, who are working up a perspective on the housing affordability crisis. And we're also planning to get something more technical out on the measurement of credit risk. So stay tuned in to see where we go with all this. Now, I'd like to remind viewers of several useful sources of banking information and CPD resources. These are Actuaries Digital, the Institute's newsletters and the various events. Well, that's it from me. I'd like to thank the members of the Banking Practice Committee and the Banking Practice Education Subcommittee for their support over the year, and I look forward to continuing to working with them in 2018. I also encourage anyone else out there who is interested in helping us to please get in touch. Right now we need help to establish a faculty to get this course up and running and to set and mark examinations. So please contact the Institute if you're interested in helping. Thank you for listening.